Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we look at all things from the world of trading, but we also answer your burning trading questions.
We do indeed.
So today, all about letting go.
It makes me want to sing.
I had a feeling.
Frozen.
This was
Let it go. Do you mind if I kick this one?
You kick off as long as you're not singing.
Actually,
that's fine.
I'm not going to sing. I'll try. I promise I won't. So letting go. This subject is all about baggage, really. You've got to let go of the baggage, of the noise and all of that stuff, because we collect baggage as traders. With every trade we've just finished and completed, that's an element of baggage, which can affect our ability to take the next trade, clinically and following our process, how we should do. The problem is people don't let go. And so they will look at their recent past and whether it's really good, that could affect them, or if it's not so good and they've had a drawdown over the last several trades, then that will affect them as well. So what we've constantly got to do is be in the moment. There was the ex-world snooker champion, Steve Davis, said the same thing, because in snooker, and I appreciate not everyone understands snooker, but it's like pool, but with a bigger table. Snooker players are planning out usually 3 or 4 shots ahead on average with most professional snooker players. Now, like Steve said, you go and miss a shot and then you come off the table and you get back on, you get another opportunity. If you're still carrying the baggage of the fact you just missed that shot on the last time, or you might have just lost the last game, then that's going to weigh on you as you get down and you line up to take your next shot. And he talked about being in the moment and not taking that baggage with you. You've got to just park that. This is now new. This is your new reality. If you don't let go of all of that stuff, all the last shots, it's going to affect you taking this one, because then you're going to feel the pressure of, oh God, what if this one misses as well? I might lose the frame. I might lose the game. It's the same in tennis. It's the same in all of these professional sports. And it's exactly the same in trading. So you've got to get really good at letting go.
Love that. Being present. I remember, I think it's one of the last episodes of The Last Dance, which is a documentary about Michael Jordan. And there's I think it's one of the journalists or one of the people that was around him for a long period of time. And he said he was the most present individual he'd ever met. Forget meditating and Buddhism or any of these things that's supposed to bring you present. He was the most present human he'd ever met. And that, I think, links back to what you're saying, because he had an amazing ability to be able to put any failure, any missed shot behind him and still be able to move forward. And there's a college basketball coach that actually worked with Michael Jordan who says that, yesterday's gone. You can't do anything about it. All you can do is focus on where you are right now. Now, easier said than done. And I would say, speaking personally, this is something that I struggled with in the early days with trading, because once I realized, it's like, right, I need a strategy and I need a process, and I need to be much more diligent in what I'm doing rather than just trying to make money. But what I found is I would probably overanalyze the previous week's trades, the previous day's trades, in an effort to be better for the next day. But actually, what I didn't realize initially when I was doing this was I was actually bringing in the emotion of the previous day or the previous week. So it's a fine line between, reviewing what you've done and learning from your mistakes versus bringing in either the pressure or bringing in the habits without realizing it and making those same mistakes. So yeah, it's something, again, we've talked about in other episodes. It's something. It's a learned approach. You don't come in on day one and know how to do this. It's one of those scenarios where you're gonna need to be present. And even when your phone goes off in a podcast because you haven't put it on silent, you shouldn't really let it distract you. So I think it's a learned skill. It's not something that traders are going to wake up on day one and be able just to simply have that. They're going to have to take time to be able to get it focused and get it right.
Firstly, I massively admire you for being able to talk all the way through that without being distracted by your call. Secondly, just to add to the point, when people are talking of baggage, when people are looking back over past trades, they're looking at their winning trades, losing trades. One thing that I always advise people to do, especially if you're trading mechanically, is you should be logging the trades you missed as well. Because people look at what they did do. Yeah, but what about all the ones that you should have taken, but you couldn't take because you were not there or for whatever reason? You should still log the trades that set up that you weren't there for, or for various reasons you didn't take. Because again, that can help with confidence as well when it comes to baggage. Because you might have a result, let's say over the last month, and you've lost money, for argument's sake, and you're trading a given system, let's say. But what about all those ones that you missed? Well, if they were into the mix, could it have actually been a profitable month? It may well have been. And so I think it's really important for people to not just log what they have done, but also log what they missed, because that can really help with their overall confidence. And confidence, everything in trading is a confidence game, much like in professional sports. And then that helps with their baggage too. So their baggage, if you can carry you're always going to have baggage, but you're not going to forget the trades that you've taken, but you desensitize the impact that they've had. And the more confidence you have, then the better you're going to be going into that next trade and the next trade and the next trade. Because, okay, yes, I've had this experience, but actually that wasn't that bad because I missed some trades there. I was profitable, but overall I would have been profitable. It's just the way it went. Oh, okay. Well, I'm okay with that now. Well, as opposed to, oh God, I had a losing month or whatever. Yeah. So constantly try to bring yourself to a point of confidence in what you're doing, so that in the now, in the moment, you can execute as well as you possibly can. And that way, you're putting yourself in the best position to just follow your trading plan. That's what it's all about. If you're carrying baggage in, you're not going to trade the plan very well.
No, the little excuses seep in. Oh, something happened on the news. Oh, I wasn't around that day, or something. Yeah, all these little minute excuses come in, which culminate in you being you being far away from where you need to be.
Yeah.
Good. So our question.
Yes.
I've got our question. So should I listen to analysts and pundits as part of my trading process?
I remember. Oh, sorry.
No, you go, mate. No, you go.
I have an old story from this, and this is going back a few years. But this trader that I knew at the time, he started watching Bloomberg, CNBC, whatever, to track to follow what the analyst is doing, because he was bored at following his plan, because his plan was a bit boring. It was swing trading, and he wanted action. And it was interesting because he was a pilot, and so he would only have he'd have a day off or 2 days off time, and then he'd be off flying around wherever he was going. So in that day or two, in that window, if his technical mechanical approach or patterns that he was looking for didn't set up, then he wouldn't have any trades. And he's sitting there thinking, yeah, but I've only got another day and I've got to be back flying again. So he started looking for other stuff. And what he started looking for or looking at was these analysts on the TV. And there's all sorts of different analysts. But if an analyst came on and said, oh, buy gold, or we're bullish gold, he would go and buy gold. And I remember him telling me this at the time, and I thought, oh God, it's not going to end well. And he ended up blowing up a £10,000 account, because an analyst is only going to be right half the time. And a lot of the analysts that the big banks put out, they will have analysts who are bearish a given market, and they'll roll out another analyst who's bullish a given market. They'll do that on purpose. So if you're trying to follow analysts from the big banks, they deliberately do that, so that a month down the line they can say, oh yes, we were right, because they'll pull out the one who was right, and he'll go back, get Will back on the TV. So I think it's a dangerous game trying to watch what analysts are doing and saying, because you don't know what their agenda is. They may have an agenda on the TV as well, when they're on there to get clicks, to get, they want to be on the TV. It gives their firm exposure. There can be all sorts of other reasons. If they make a big call on something, oh, right, this person's got a really big call here, let's get them on. And so, which might just be good for their exposure, but is it right for you to be following them?
It's true. It's their call as well. It's in the context of what they're doing, and it doesn't necessarily mean that they've got their cold hard cash on the line. And that's not, I'm not saying there's anything wrong with that, but you as the trader, you might hear something, and you go and place a trade because the analyst is bullish on gold. You put a 100-point stop on, you're stopped out, and the analyst was right over a period of 3 months, but it didn't fit the way that you tried to marry your trade with what the analyst was saying. So even if the analyst was right, it doesn't necessarily mean the context by which you try and do the same thing or follow the same analysis is going to work, because the way that you trade, or the way that you wrap your trade around that market could be completely different. So it's being able to contextualize and say, well, why are they saying that? What's their agenda? Like you said, it could be that they're extremely bullish on that particular instrument or market, and they have been for 2 years. It doesn't necessarily mean, and they can afford the luxury of not having to necessarily be right within a 2-week period or with a 100-point stop. So it's you shouldn't really be trying to draw too many conclusions relative to the specifics that you're trying to trade.
Even as money managers like you and I, we have to appreciate that our investors, they don't understand every trade that we're taking. So it's tough. It's tough to follow. Even if someone's got money's invested in a fund, with a hedge fund, whatever, with a money manager, it's still tough for them when they don't understand the full analysis, the full thought process behind it. And even if you had a trader who was, you had educated, who understood your strategy and everything else, but you're still going to take that trade that they wouldn't otherwise have taken, and they might want to follow you on that trade. But it's still very, very difficult psychologically for them. We have to understand that it's very, very difficult, because that trade belongs to someone else, so to speak. So they're comfortable with it, but are you? Now, you might be able to get to that stage where you are and say, yeah, I totally understand everything that Ali or Charlie's done here. And yes, I want to be in, essentially be taking that trade. But you've got to get to that point. If you just want to be lazy and just follow an analyst on the TV or wherever, then you've got to put up with the results of that, because you're probably going to be flaky. And as soon as things don't go so well, you'll be bailing out on everything else.
Or looking at another analyst. Yeah, exactly.
Exactly that. Yeah.
Good. On that note,
his name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.